In 2024, the global economy is facing a unique scenario as disinflation takes center stage. While inflation has been a key concern for the last couple of years, the trend is starting to reverse, and we're seeing falling inflation rates across major economies. But what exactly does disinflation mean, and how is it impacting global markets? Let's break it down and figure out how this shift is affecting everything from consumer spending to investment opportunities. Disinflation, simply put, is the slowing down of inflation. Now, don't confuse it with deflation, which is when prices actually start to fall. Disinflation means that prices are still rising, just at a slower pace than before. For instance, instead of seeing inflation rates of 8 to 9%, we're starting to see rates around 4 to 5%, which, while still higher than ideal, is a far cry from the sky-high levels we've grown accustomed to in recent years. For businesses, this can feel like a bit of a relief. Let's face it, no one likes to deal with skyrocketing costs, whether you're a small business owner or part of a multinational corporation. For instance, supply chain disruptions and higher production costs have been a major headache for companies. But now, with inflation cooling off, there's hope that costs will stabilize, leading to better profit margins for many industries. Take tech, for example. Semiconductor companies that were hit hard by rising energy and material costs are now seeing some relief, which could spur investment and innovation. But it's not just businesses that are feeling the effects. Consumers are also experiencing a shift. After years of tightening their belts due to price hikes on everything from groceries to gasoline, people are starting to notice the effects of disinflation at the checkout counter. While prices may still be rising, the rate at which they're doing so is slowing. This could mean that while inflation isn't over, consumers may begin to feel a bit more comfortable, especially when it comes to discretionary spending. Of course, it's not all sunshine and rainbows. While disinflation is a positive sign, it comes with its own set of challenges. For one, falling inflation can also signal that demand is weakening, which can be a sign of economic slowdown. In economies like the US or Europe, where inflation has been largely driven by high consumer demand, disinflation could be a sign that consumers are pulling back, either due to rising interest rates or growing uncertainty about the future. What's more, falling inflation doesn't automatically translate to stable growth. In fact, it could lead to what economists call stagflation, if growth continues to falter while prices stagnate or drop. So while falling inflation is generally good, it can sometimes create a mixed economic signal that investors and policymakers will need to watch carefully. Another interesting element of this disinflationary environment is its impact on global markets. We know that inflation rates have been a big concern in places like the US, Europe, and parts of Asia. Additionally, disinflation can impact the global commodity market. Oil, for example, is often seen as a key barometer for global economic health. On the winner side, we've got tech stocks, particularly those in cloud computing and semiconductors. As inflation cools and central banks shift to more accommodative policies, tech companies could see a resurgence in investment. Similarly, the real estate market could benefit from lower interest rates, which would make home buying and mortgage refinancing more affordable. On the other hand, industries that rely on higher prices to drive profits, like oil and gas, might see less enthusiasm from investors. With lower inflation, oil prices could become less volatile, making it harder for these companies to generate the massive profits they've been enjoying in recent years. Finally, let's talk about the global economic outlook. While disinflation is generally seen as a sign of stabilization, it's important to remember that no economy is an island. There are always risks on the horizon, whether it's geopolitical instability, supply chain issues, or the potential for future recessions. Disinflation doesn't mean we're out of the woods yet. It's just one piece of the puzzle. So in conclusion, disinflation in 2024 is a positive development for global markets, but it's far from a clear-cut win. While falling inflation rates offer relief for businesses and consumers alike, the underlying challenges in the global economy remain. Investors will need to stay vigilant, watching for shifts in consumer demand, central bank policy, and international trade dynamics. So there you have it. Disinflation in 2024 is shaping up to be an exciting ride. Will it lead to long-term economic stability, Or is this just a brief breather before the next big challenge? Drop your thoughts in the comments below. And hey, if you enjoyed the video, don't forget to like, subscribe, and hit the bell.